Alrighty, welcome everybody. Today's topic, I'm going to be talking about swing trading the trend. Swing trading the trend. Now, I've got the question box up in front of me, so as we go through the webinar, if anybody has any questions, I'd like to answer them real time so you're not sitting there thinking about that question you have. So go ahead and type it in the box, and I'll be glad to answer it when that comes up. Renee talked a little bit about me. I have been trading for actually 35 years now. I'm a hedge fund manager. I love to teach. I've made my money in the stock market. This is how I make my money. I'm not one of these persons that teaches but doesn't do. I do and love to teach about it. It's a hard thing to be. A professional trader is not an easy profession. Why you're choosing to do this, I have no idea. You got to have a real passion. You've got to have rock solid strategies. You've got to stay with it. You've got to check your ego at the door. It's a tough road, but it can be done. It can be done. I've been a keynote speaker, as Renee mentioned, with a number of companies. You can see them all there. And currently, I'm the founder of what I believe is the best educational website available today, and that is www.optionsinfinity.com. At the end of my presentation, we'll go on to www.optionsinfinity.com, and I'll show you just a little bit about what we have to offer. Okay, the outline for today, I'm going to talk about financially strong stocks. I think when you're trading the market, you need to focus on a small market basket in order to succeed. There are over 7,500 publicly traded corporations out there, and you can't follow them all, but you can with a very small market basket. And I believe that the financially strong stocks that I pick year after year, they outperform the market. But the big boys, the bigger they are, the harder they fall. So when they do fall, there's opportunities for us to get puts on them also. Why these stocks outperform the market. Then I'm going to go over our 2016 financially strong stock list. You can write these down, but Renee is also recording this, so you can always go back to the recording and pick up that list. All the members of my website have this list that comes out every March of the year. Now the indicators I use, this is a very simple strategy. I use a regression channel, money flow index, the macro MACD, which is an indicator. It's a proprietary indicator that I came up with. It's the daily version of the weekly MACD. And even though Roger doesn't like fibs, I love them for the exit. Fibonacci extensions pinpoint when I need to take my profit. You know, you're supposed to cut your losses short and let your profits run. Well, when is enough enough? The fibs tell you when enough is enough. Then I'm going to be talking about the leverage of in-the-money options. Then we'll go over 4 actual trades, 2 on Apple, 1 on the way up, 1 on the way down. Lulu that returned 132%, and Nike just recently that returned 137%. These all occurred this year. This is just a sampling of what we can do. Now, you're going to look at that and say, man, that's fantastic. And what you have to realize is that there are going to be losers. And there is going to be a losing streak. There is no perfect strategy out there. What you have to do is manage your money and make sure that you don't go hog wild and trade too much. And I always tell people, if you feel any anxiety during a trade, you've got too much on that trade. Professionals only put about 1% of their portfolio on any trade. Now, I look at 1% of the risk I'm putting on. So it's going to be higher than 1% of my portfolio, but that's the rule of thumb I use. You got to stay in the game. If you got a rock solid strategy, it's going to lose. It's going to lose. But be prepared with the same amount when it starts winning. Then I'm going to be going over trading records, and the last thing is a chart right from Dr. Van Tharp's book, Trade Your Way to Financial Freedom. It's generating income and financial freedom. Then we'll go over the website, and I'll bring you all up to speed on what we've got there and what I'm going to offer to you today. Okay, this is a chart that I've used for quite a while, but it shows the point that this is an example of 3 stocks, Danaher, Monsanto, and Caterpillar, that are financially strong stocks. The black line here, this is a chart right from Big Charts. The black line is the S&P 500 that has been normalized over a 12-year period. It's been normalized. Now, what it shows is that Monsanto outperformed the market close to 800% going into 2008, and then it fell, just like everything else fell. But look at the way it crashed. It crashed, and it kept crashing all the way till 2010. That's a lot of money on the put side. On the put side. Here's Danaher and Caterpillar, and they were up better than 300% versus the market, and that's what you want. You want a market basket of stocks that are going to outperform the market. And what I'm looking for is, first of all, I look for the 10 strongest market sectors, and then within those market sectors, what I'm looking for is something that has a company that has positive cash from operations. This is a chart on Abbott Labs. You can take it all the way back here in 2007, where it had $5 billion worth of cash flow. Cash flow is more than just net income. It's adding back in the depreciation, any changes in working capital, till you finally come up with the cash from operating activities. This is how much cash that the company has to spend. This is a more important number than their net income or earnings per share. Business people all know it's not those numbers, it's the cash from operations that shows the strength of a corporation. What I'm looking for is a 5-year trend. 5 billion, just about even, 6.9, 7.2, 8.7. That's the kind of trend I want. That's a financially strong corporation, and it will continue to be so, and it will outperform the market. This is a list of 2016 financially strong corporations. Like I said, you don't have to write these down because this is being recorded, and you can always go back to the recording to this spot and pick these off. Every year I come up with this list in March. Usually stock like Apple, Amazon, Google, Starbucks, Coca-Cola, McDonald's, Home Depot have been on the list for many years. Once they're on the financially strong list, it's hard to knock them off, and very seldom do new ones come on. In 2016, there were only about 5 new ones that came on. Scott has a question about why are the numbers old on the cash from operations. Scott, that was a chart I made way back when. I've been trading this, remember, for 35 years. And that was a chart I made a long time ago. It makes the point, and that's why I use it. I'm sorry. I was trying to show you what cash from operations, what I'm looking for. Amazon, Amgen, Apple, Cisco, Clorox, Coca-Cola, Corning, Danaher, DirecTV, which is now AT&T, which is just ticker symbol T. Disney, Gilead Science, Google, Home Depot, McDonald's, Microsoft, Nike, PepsiCo, PPG, Pittsburgh Plate Glass, Priceline, Procter & Gamble, Starbucks, and Verizon are the ones that I watch. The thing about watching a small market basket of stocks, you could pick any one of these out here and I will tell you without looking at the chart what it looks like, what the chart looks like. And that's the kind of familiarity you need to have with your stocks if you're to make money in the stock market. Okay, here's the indicators I use. I like to keep the strategy simple. You keep it simple and it's going to be easy to reproduce time after time after time. The first thing I look at is the regression channel. This is the regression channel. The regression line, the purple line here, is calculated by taking 50% of the price above the line and 50% of the price below the line. So this is a very good trend line, if you will. And then what you have here in the green is the plus or minus 1 standard deviation. And the gold is plus or minus 2 standard deviations. And I'm going to show you what that means on the next slide. The money flow index is a momentum indicator, but it has volume in there. And I love to see, if I'm looking to make a call, I want the money flow index going up. That shows me that the money is flowing back in to the corporation. So first I need this to be either oversold or overbought. Then I need the money flow to be going in the direction that I'm looking at. And then I go from the left-hand chart to the right-hand chart for my timing. On the right-hand chart, I'm looking at, this is, I love candlesticks, so it's all in candlesticks. I've got the 5, 8, and 15-day exponential moving average line. This is the macro MACD. You notice it doesn't, if you've seen MACD before, it's up, down, up, down, up, down, up, down. Whereas the weekly MACD, the daily version of the weekly MACD, stays more with the trend, and that's what you want. That's what you want. I like to have that, and then before I get into a trade, I look for the change of color. I look for ready, set, go. Once I get in, I look to exit on Fibonacci extensions. Let's talk more about the regression channel. You can see this is a regression channel, and a regression channel works with any time frame. Any time frame. It's going to just calculate it based on the time that it's looking at, and you're going to get the plus or minus 1 standard deviation, plus or minus 2 standard deviations. And I look at different time frames for my trading. Now, what's the big deal about the regression channel is that 68.2% of all prices will be contained within plus or minus 1 standard deviation. 68.2% of all prices are contained within plus or minus 1 standard deviation. 95.4% of all prices are contained within plus or minus 2. If you go back to this chart that we had up here, it's basically like this gold, the plus and minus 2 is kind of like the casing of a sausage, and it's going to contain the meat within here. Occasionally you will get an outlier, okay, because this is statistics. The market doesn't know for statistics. And you are going to get an outlier, but boy, not very much. And usually that's an excellent opportunity, because if you think about this regression line as a big strong magnet, the further it gets, it's going to pull it back harder, and it usually overshoots. This is the mean. This is the true value here. It's going to always suck it back to the true value. Okay, so the regression chart is the first indicator or tool that I use. The second is the macro MACD, the daily version of the weekly MACD. The MACD, most of you know what the MACD is. The MACD is calculated by the 12 period exponential moving average line minus the 26 period. And then the signal line is the 9 period exponential moving average line of the MACD. Of course, then you get crossovers, you get histograms, and the thing is with the MACD, this is the kind of up, down, up, down, up, down you're going to get, and it's very, very difficult to trade this on a consistent basis. Whereas what I look at is the daily version, and that really knocks out a lot of the noise and allows you to stay with the trend. I not only want to see the color of the bars change, but I want to see it happen for 3 days. Ready, set, go. 3 days. And I'll show you that when we get into some of the actual trades. Now let's talk about the leverage of in-the-money options. Supposing you wanted to buy 100 shares of Microsoft in February of this year, it was at $49. That would be $4,900. And yes, indeed, it did go up by April. It went to 56, so it went to $5,600, or a $700 return, 14.3%. That's pretty sweet. Pretty sweet. If you were to buy a 10% in the money call, 10% in the money call, okay? In other words, if the stock is at 49 and you took 10% of that, or $5, minus the 49, you're going to come up with a in the money June 44 call. A little bit more expensive than a lot of people pay for options. A lot of people play options either at the money or out of the money. Those are the ones that usually lose. The ones that are in the money already have intrinsic value. They already have intrinsic value. At this point, this 44 call has real value of $5. And then $1.73 of time value. So this is an excellent opportunity. This also is an option that has a delta of 0.8. A delta of 0.8 means that for every dollar that Microsoft moves, the option will move 80 cents. So you've got an instrument that's going to follow the underlying stock. The difference is, up here you had to pay $4,900 to control 100 shares. Down here you're paying $673 and still controlling the same 100 shares. This $673, when the stock went up, so did the option. It went to $12.40. You had less return, but you started out with less invested. This was an 84% return on your money versus 14.3 up here. That's the leverage. That's the leverage of in-the-money options. Let's talk about some actual trades. This is a trade that was made earlier this year in February. We were in and out in about a month and a half, 2 months, returned 110%. What we had here is I'm looking at this portion of the chart right here. You'll notice that I showed this, and then I'm going to show the up right here because we made money on the way up, and then I'm going to show how we made money on the way down. But down here you can see that according to the regression channel, it was oversold. It was oversold. It was down to the -1 on the regression channel right here. You'll notice also that it was a good support point. And then the money flows started to go up. Then I come over to the right and I'm looking at the macro MACD, and I'm looking at a ready, set, go, and we got in right here. Now, once we're in, when do we get out? Well, I use the Fibonacci's to tell me when to get out. And this is the point we got out. When it hit the 261, that's overextended, and that's the point where I want to get out. The April 85 call on Apple went from 1173 to 2465. 110% in about less than 2 months. Told me to get out here. A lot of people wait till you either get a move that's lower here on a trailing stop, or you know, you get the change of color down here, or you get the crossover of the bars. But if you wait till this period, you're going to give back a lot of that profit, because as soon as you change directions and you get a couple of these bars down, that is going to shrink in a hurry. It's going to shrink in a hurry. That's why I love the fibs. It gets me on the way up. I'm leaving something on the table. I always am, okay? But getting it on the way up is the best way to maximize your profit. So here's Apple on the way up. We're out, okay? The next one shows me on the way down, and that's this portion of it. Came up here, it was at the +1, it's overbought. The money flow is starting to come back out. We got a ready, set, go right here. This was the go day. This was the go day. We got in April 19th, got out less than a month later, May 13th, 100%. We bought a June 115 put, okay? It was in the money. You can see that at this point in time, Apple was about 108, okay? So it was in the money, $7. Another $2.90 of time value. That June 115 put, when we got out right down here, was worth $19.73, or 100%. Notice that it's red all the way down here, and the ribbon, I call this the Fibonacci ribbon, because the Fibonacci sequence numbers are 5, 8, and 13, and that's what I use the ribbons here. The ready, set, go, Mike, is not a moving average. The ready, set, go is when the histogram down here changes color. You see this goes from green to red, and you come up here and you see that's this day right here, okay? That's the change of color. That's the ready. This one's a lower low. That's a set. This one's a continuation. That's a go. Ready, set, go. Ready, set, go. I'm looking for the ready, set, go to be going in the same direction. Once I've got the ready, set, go, now I know that that's the confirmation I'm looking for. Okay, it's not the average, it's the bars. Okay, here's an actual trade on Lulu. End of last year to the first of this year, a little bit more than a month, one more time. I'll get back to that in just a second, Mike. This was 132%. You can see that at this point in time, Lulu was oversold. It was oversold. It actually penetrated through the wall of the casing. Okay? What do we know? we know that it's going to be sucked back up. And as soon as the money flow started coming back into Lulu, we were ready. We had actually got a ready, set, go early over here, but I didn't take it because the money flow hadn't started to go up yet. See, I need both overbought or oversold and the money flow to be going in that direction. Then I go over to the right-hand chart and I look for a ready, set, go. And that's 3 days once I see the money flow starting to go in there. That was right here. We got out at a 161 on a Fibonacci right there and made 132%. Okay, so the ribbon, this ribbon here is the moving average 5, 8, and 13 day. That's exactly right. It's exponential. These are exponential moving average line. And a lot of the big boys follow this 5-day moving average. That's kind of their, well, they watch it religiously, and if it stays above that, they stay with the trade. You can just see this time and time again how it runs right up along here. I like the 13-day. That's my gold standard. And I'll stay with it till I get a Fibonacci unless it crosses over. Once the 5 and the 8 penetrate through the 13, I'm out. That's when I do have losers, and I do have losers. That's when I get out. When the ribbon, the 5, 8, and 13-day exponential moving average line go in the opposite direction. Okay, the last one I'm going to show is a trade we made just recently. We got out of this. We got in September 7th, got out October 17th, 137%. Nike. I'm not showing you the chart on the left-hand side. I wanted to blow this up for you. You can see how it came down here and changed colors right here. It made a ready and no set. That was an abort. Okay? So we started the count over again. Ready, set, go. And that's when we got in, right in here. Okay? Notice how the ribbon's going down. It goes through the 127 on the Fibonacci's. We stay. Keeps going down. We go through the 161 on the Fibonacci's. We stay. Comes down to the 261, and that's fully extended. That's fully extended. Ribbon's closing up. We're out. 137% return in about a month and a half. These happen all the time. And the profitable trades far exceed the losing trades, both in percentage and return. When I've got a trade that works with me on these swing trades, it'll be upwards over 50%. Usually when it goes against me, I'm getting out around 25, 30%. This is a positive expectation strategy. When you've got a positive expectation strategy, you just stay with it and just stay with it, and your job becomes executing the trade. Okay, in 2014, I decided to do a double-up challenge where I started out with a $25,000 portfolio, and the max I put on any trade was $1,000 per trade. And you can see at the end of the year, I was up 135% on that portfolio, just putting on $1,000 per trade. This would have been astronomical if I would have been putting on more on per trade. This is a very conservative approach. This is the way a professional does it. You don't go for a home run. You go for consistent, profitable trades. Now, every night, I release a video nightly blog. It's called our Pro Membership. And these trades, this record is based on what I release every night on the nightly blog. It's sent to your email. It lasts about 5 to 10 minutes long. It's basically you are looking over a professional's shoulder, and I'm showing you what I see in the marketplace and how I'm trading it. 2014, it was up 138.5%. 2015, 85. This year, currently 79%. This is a dynamite program. Consistent program. Let me just talk a little bit about Dr. Van Tharp. He is an occupational psychologist that really changed my view of how to trade. You've got to check your ego at the door. I'm a mechanical engineer. I thought that the marketplace was kind of like physical science, and I'd do my analysis, and how dare the market go against me, and I would put more money, and I was fairly good at it, but boy, as far as being a trader, Dr. Van Tharp really showed me what to do. Out of his book, he talks about financial freedom is really a new way to think about money. Most people think they win the money game by having the most money and the most toys. You read about, somebody made $2 million or $1 million. Come on, you don't need that. Do you really need that? What do you need? Dr. Van Tharp says, be realistic with your goals and you will obtain them. Financial freedom means that your money's working for you and it makes more money than you need to meet your monthly expenses. Wouldn't that be super? It's obtainable if you're willing to take the time, put the hours in, be passionate, follow somebody who's a professional, and set out reasonable goals. You can obtain it. This doesn't mean that you won't spend hundreds or even thousands of hours building the foundation for your financial freedom. It does mean, however, that this financial freedom is possible once you lay the groundwork. You go to a lot of people that are close to retirement, they'll go to a financial planner, and the financial planner will look at their bank account and say, nope, you're not ready to retire, you don't have enough in there. Would you rather have a large amount of money in the bank or a consistent way of making cash flow that you can rely on month after month after month after month? I choose the latter. I choose the latter. Okay, so how do we learn more? How do we learn more? I'm going to go to my website in just a second. The first thing I'd like you to do is become a free member. Become a free member of the website. And all these videos that I've prepared to teach you what I do are absolutely free. Learn how I trade. Become familiar with me. It's free. If you like what I do, then maybe you're ready to take the next step. Okay? In the next step, once you've been a free member for a while, you're going to go ahead and once you're a free member, a couple days after you get all signed up as a free member, you'll get an exclusive offer. And you don't have to activate this right away. Then once you get the offer, it's going to be good. Anytime you want to. Anytime you say, hey, you know something? This guy makes sense. I like it. I understand it. When you activate this for only $7 for the first 30 days, you will become a pro member, which means you will get the nightly video blog emailed to you about 5:30 every night, talking about what I did and what I'm going to do. Okay, Rebecca has a question before I go further about the Ready, Set, Go, and that's cool. Let me go back and see if I can clarify that. Okay, so you're saying, Rebecca, you're saying it's hard to see my little white thing here, but this was a ready day. You can see it changed color from green to red. This was a ready day, but the second day didn't have a continuation. It didn't have a lower low. So this was an abort. And now I start to count over again. Ready, ready, lower low, set, continuation, go. Ready, set, go. Okay? And all of this is fully explained for free on my webinars on the website. Were your returns on the earlier slides as options or as stock? They were options. They were options, and I showed you calls and I showed you puts. What is your opinion of weekly options? Do you work with them? I absolutely do. But there's only two things that I follow for weekly options: the SPY and TLT. The SPY and TLT. I don't touch them with the financially strong stock. The weeklies are very powerful, but you need them to react quickly. And if you're on the wrong side of a weekly, you can be wiped out. So you got to be very careful. And I've got strict rules on how to trade the weeklies, and I will occasionally talk about those on the nightly video blog. I also on the nightly video blog talk about theta trades, which is actually selling premium. It's those three things that's all on the nightly video blog. So let me bring over the, I've got 2 minutes here. Let me bring over the website, www.optionsinfinity.com. When you come over, here's our home page. First thing I want you to do is become a free member. And I'll show you how to do that in just a second. Once you are a free member, you have access to all of this. This is what I call Trading 101. What are options? Options leverage, financially strong. The chart setup, trade size, the psychology of trading, platform alerts. Okay. Then as far as technical analysis, I talk more about regression channels, Fibonacci's and measured moves, macro MACD, money flow, exponential moving average, etc. Then I'm going to show you how I trade swing trades, credit spreads, and weekly options. And this is everything you'll receive in the nightly video blog. So click on free membership, and up you come, and all you have to do is fill out your first name, last name, email, do it again, set up your username and password, sign up. Once you sign up, you're automatically in the system. You'll be getting an email in a couple days that with the offer to become a pro member. I want you to take your time and look at what I've got available. How do I trade? Does it make sense for you? If it does, come join me. If it doesn't, I hope you enjoyed the education. Okay? So, I'm here to help you. I am a professional trader. This is what I do for a living. I've made my money. I'm now trying to help you out to make money too. I hope you all join me, and I hope you got something out of this webinar.